Joining us now with his market outlook is Sebastien Page, the head of global multi-asset at T. Rowe Price. His group oversees $361 billion in assets and manages the target date strategies. Sebastien, just tell us first what you think this hurricane could do to the overall market. Clearly, the energy sector is moving, but it comes at a time when the overall U.S. economy, the data was starting to look better. The coronavirus case counts were starting to look better. Could this be a fly in that ointment?
I don't think it would be. It will impact energy directly. It can destroy some demand in the short term. But you're essentially asking a broader question, which is stocks appear to be somewhat divorced from the real economy at the moment, right? Think of 2020. We can estimate earnings down about 23%, GDP down 8%, 20 million people unemployed, and stocks are up 55% from the bottom. The key is, though, that stocks anticipate future earnings and future conditions. So this is what's going on. Again, I don't think that the hurricane itself is a major event for the stock market. And I'm thinking more broadly that stocks are actually fairly valued at the moment.
So which direction do you think they will go? And if they're fairly valued right now, do you think they still have room to go up, or do you think that they're due for a pullback at this point?
Stocks have room to continue to go up if you take a 6 to 18-month horizon. You know, we're asset allocators, so everything's relative. We have to look at the opportunity set of stocks relative to bonds, for example. So when I say stocks are fairly valued, they have room to go up, probably not double digit, but relative to bonds, I look at the yield on the Barclays Global Aggregate this morning. It's 90 basis points nominal. So we're thinking in relative terms. And if we look at the earnings yield on stocks, which is very hard to estimate, but if we kind of move forward 2021, 2022, compare that to the bond yield, and we find that stocks, despite reaching new highs, are not that expensive from that lens.
How do you explain a day like today? Is that what's happening? People just having this realization? Sebastien, you've got Netflix up 10% right now. Facebook is up 7%. The software names are flying off Salesforce. But, I mean, a lot of these companies are having huge moves off no news. It can't just be a bunch of analysts playing catch up with price targets. What's going on?
Yeah, you know, today still feels like a COVID on kind of day. Think of it as the paranoid rally, right? The liquidity, the infusion of stimulus. We've had stimulus. If I look at the high range estimates, 24 trillion. The size of the total global market cap of the total stock market is about 48 trillion. So about half of the size of the total market cap out there. That has created, in part, the rally in stocks, together with bringing rates down 150 basis points. So today is a continuation of that paranoid rally, if you will, where people still seek the relative safety of the big tech platform, the big growers, the companies that are weathering the COVID on environment quite well. Now, what we're watching very closely in this environment is the potential for a rotation between those growth stocks and the value stocks.